kind of what the advantages are and disadvantages to long-term rentals as it relates to short-term rentals in this marketplace. One of the things that I look at is that the disadvantages are that your top line gross rental income is definitely going to be lower than your daily, weekly, monthly rental that you've been experiencing as a short-term vacation rental owner. In addition to that, tenants responsible for cleaning, replacing light bulbs, smoke detectors, batteries, AC filters. So there's a little bit more wear and tear that way. You don't get access to the property quite as much. But the long-term advantages are, especially through summertime, tenants are going to pay for utilities: water, sewer, trash, electricity, gas, internet, all of those types of things. You don't have necessarily upkeep of personal property. There's less turnover because you're placing those tenants in, so you have that more consistent income. If you self-manage, great, but if you don't self-manage your vacation rental, the fees for vacation rentals are significantly higher than for long-term. So our leasing commissions are essentially half of 1 month's rent, so it comes out to about 4% of a year. And then management fees are $85 a month, regardless of what the price is. It's just kind of flat rate. So your ongoing costs are going to be lower than if you were having your property managed by a long-term vacation rental company. Some of the additional advantages that we're seeing in COVID is that you can actually take a look and see where the tenants work, right? And if their industry is at high risk, you have the ability to deny those tenants based upon where they're working, right? So if they work in restaurants, that's something that you can say, hey guys, unless you have other sources of income or guarantors, it's not something we necessarily feel comfortable with. Some of the disadvantages, I don't know if you guys heard of this moratorium on evictions. There's both kind of state and federal regulation that has come out. Through the state, it's an executive order that Ducey put out about a month ago, we'll call it. And then through the CARES Act about a month ago as well. They both put about 120-day, some are calling it a moratorium on evictions. It's not exactly a moratorium per se. You can still go through the eviction process on a statewide level. You just can't have a constable remove the tenant. On a federal level, if your loan is backed federally, then you can't even send a 5-day notice. So we have different paperwork for tenants that are delinquent. Going on to the delinquency side, what we're seeing as it relates to delinquencies is we originally had about 15% of our tenants for April let us know that they were having issues. Fast forward 3 weeks later, we have about 2% of tenants that remain delinquent. We manage about 400 single family homes. And so, call it 10 tenants that are still having issues. Of those 10, 7 or 8 are habitual late payers. So we only have 2 or 3 tenants, less than 1% of the portfolio, because we go through a significant qualification process to make sure that we have quality tenants that can kind of weather these types of storms. So those are some of the advantages, disadvantages to the long-term rental side of things. I thought it'd be fun to share a couple of leasing stats. So March 2019, total amount of transactions for leasing, 1,793. March 2020, 1,783, within 1% of each other. Days on market, 2019, 23 days on market on average on MLS. 2020, uptick of about 12%, went to 26 days on market. The average lease rate, 1639 to 1759. So over the last year, rental rates still went up 7%. Couple of quick sales stats for you guys. So we had our sales meeting this morning and we were trying to figure out where are the buyers, where are the sellers coming from? And what we're realizing, and it's really about life-based situations. Had a new client because of a divorce, had a new client because of a death in the family, and also people that are realizing opportunity. So anecdotally, one seller is wanting to put the property on the market because values are up 13.3%, medium values from 2019 to 2020 in the last 12 months. That just came out on MLS. And so if I could tell you today, we could liquidate your stock portfolio when the Dow is at 28,000, right? But it's at 29,000, right? We're at the top of the market. And I told you, hey, we have to liquidate at 28,000. everybody in this room would say, yeah, I'd do that right now, because now we're sitting at what, 23, 24,000, right? And so I think that's what people are realizing is they're saying, if I can capitalize within a couple percentage points of top of market, I want to capitalize on that equity that I've realized over the past number of years of owning the homes. So that's what a lot of the people that have more of a short-term outlook, that don't plan on owning these homes long-term, are doing. They're saying, let me get out while the market is still hot. MLS predicts that there's going to be about a 1% drop in value from March to April. But what a lot of our clients are doing is they're long-term holders. For the most part, these are legacy assets that they'd like to pass to next generation type assets. That's the mentality that they have. And so we're just asking them to have a little bit of perspective. This too shall pass, right? Whether your outlook that this will last for 6 months or 18 months, if you fast forward 10 years, rental rates, real estate values will be higher than they are today. You've profited over the last number of years. So maybe for the next 6 months, next 12 months, next 18 months, you have to break even. Maybe you're not as profitable. Maybe you have to feed the property a few $100 a month. But as the market rebounds, you're going to remain strong. So really what we're doing with our clients that are interested, or what I've offered to Amanda, is to say, we're happy to provide an analysis on the long-term rental side, right? So those that are interested in potentially converting from short-term to long-term, we can let you know what we think that property will rent for on a long-term basis. And some of the other things that we can look at is or when we go to market the properties, is to give flexibility in the marketing. We can let prospective tenants know this could be a 6-month rental, it could be a 3-month rental, it could be a 12-month rental, really whatever the owner is looking for. It could be furnished or it could be unfurnished, right? So for the most part, 12 months unfurnished, that's typically the standard. But all bets are off as it relates to COVID. And so really what we're putting out there is to say, a furnished 6-month rental, that's probably something that there's a niche in that marketplace right now where people are interested. And so we can put it out on the MLS, we can put it out on the 100 plus other sites that we syndicate our rental listings to be able to capture the most amount of interested parties and really see what the market brings us, right? And so if that prospective tenant is interested in a furnished rental, great. If they want an unfurnished rental, Amanda and I have a good colleague of ours, Derek Green, who owns a company called Get Your Move On, who's partnering with a lot of owners of short-term rentals to be able to not only move all of the furnishings, but also to store as well. Amanda, do you have any more information on that? Was Derek offering anything special?
Yeah, they're actually, I'm going to send out a link to their website and an email that you can contact, but they are, Derek is trying to focus on keeping his guys busy during the summer. And right now there's a lot of people that just aren't there. The market's kind of come to a stall. And so to be able to keep his people busy, he's almost taking a Priceline approach of like, here's our bid. And if you go, well, no, I can't afford that. Okay, what can you afford? And if they have it in their schedule to be able to do it, it's kind of almost like a name your own price type thing that they're doing right now, which is unheard of because they are, Get Your Move On is a very high-end moving company. They focus on the properties that have like the grand pianos and the $100,000 pieces of artwork and stuff. And they are like, you know what? We will help anybody right now get the best move possible, and we'll meet. If it fits in our schedule, we'll figure out how to make it work with the pricing. So it's a really great opportunity for that. I will send out that link here in a minute. Hey, Ben, could you, I had a question prior to the call about what are the responsibilities as some of these guests are staying longer, they're staying past that 30-day mark. Sure. What liabilities would fall onto, or could potentially fall onto, a homeowner now that has somebody staying for longer than 30 days?
Liabilities meaning?
In terms of now it's a tradition, it would likely be a traditional lease that it's looking at. You've got fair housing, you've got some responsibilities that you may need to start considering a little bit more.
Yeah, so, knock on wood, in the 7 years we've been in business, we've never been engaged in a lawsuit with a tenant. We've always been able to work out any of those underlying, outlying issues. What we do is we use the Arizona Association of Realtor lease agreement, and that applies to all rentals past that 30-day mark. But we also have kind of our specialized proprietary addendum that we've created. It's about as long as the AAR lease, but that's because we've run into all of these unique situations. So we like to get everything out there up front. We like to be as transparent as possible, right? The only thing that really would be liability related is if it is a furnished rental. Okay, you want your list of furnishings, what the value is, just document what the condition is for those types of things. If it's unfurnished, not really an issue. The other liability that we oftentimes will see is going to be the pool. So as long as you have the pool barrier requirements in place, so if you have a pool fence, if you have the self-closing mechanisms, then you're going to be good there. But we have, again, a specialized addendum for properties with pools. But when a new tenant moves in, we have a move-in condition. We take a video. We document any of the imperfections. So if any of any damage is caused to personal property or the premises itself, we run credit and criminal background checks. We get pay stubs, photo IDs, run rental verifications, kind of get a full litmus of what that tenant is. So 95% of the tenants that we place get all or a portion of their security deposit back. So the only thing that the owners are really responsible for is whatever the underlying condition looks like, minus normal wear and tear. So if there's some scuffs in the walls, things along those lines. But our leases do require that if the property was professionally cleaned prior to tenants moving in, they have to have it professionally cleaned upon the tenants moving out. So for the most part, there's a lot of continuity between tenants. So there's a high level of confidence that you would get your property back in the same condition that you gave it over.
Cool. Well, let's move over to Brent McDonald with All Western Lending. There's his teeth. He's giving us his smile here. So we'd like to bring him in. I've known Brent for, probably 13 years now. And he is one of the mortgage lenders that I completely trust. And we talked a little earlier this week, and he's seeing some interesting things going on. He's going to try to keep it as focused here as we can, but there are some very interesting things that are happening in the mortgage world if you want to reach out to him on some additional stuff with that. But I'm going to turn it over to Brent right now here.
Amanda, may I trouble you for a screen share?
Yeah, absolutely.
All right. While we're getting that sorted, I did want to echo Amanda's remarks about people who appear to want to escape their more rigidly locked down state for the comforts and amenities of Arizona. I had a friend call me last week from Michigan, where they have one of the most rigid lockdowns anywhere. He's like, we just like to get some place where we can walk the dog and play some golf. Do you know a buddy who has a place? And that's happening. There's a lot of states where people would like to escape. So I would think that if you can forge some marketing plans that appeal to people in those places, you can win. Something I want to share is there's been a lot of discussion. This hasn't come to fruition. Nothing's ironclad yet. But can you see the screen right here that says, will baseball have a season? Yes. They're saying that baseball seems likely to play an abbreviated season, largely here in Arizona. May share some games with Florida or Texas. But so that's kind of encouraging. That could bring a lot of high net worth renters to our community who need places to stay for a while. So that's some encouraging news. And that's kind of the sugar before I give you guys some medicine. There's a lot of talk about forbearance. It seems almost as though our politicians sort of encourage people to run out and go get forbearances, inviting people. And that's kind of a dangerous thing. And I just want to alert you to the possibility that this could be very damaging. When they first rolled out the idea, we all liked the idea of not having to pay mortgage for a while, but how does that work? And what we're finding is that most forbearance agreements, say you take a 90-day forbearance, you don't make your payment for 3 months, then on the 4th month, once you resume payments, you have to make all those back payments that you took the vacation or sabbatical for paying. And so that doesn't help out people a lot at all, because they got to come up with a lot of money in one fell swoop. That'd be very, very painful. The other thing I wanted to share is that when they first announced this, there was talk about if you're in forbearance, they're not going to report you as late on your credit report. Well, then Fannie Mae sent out this announcement, and a lot of this is unclear and unsettled. We're on uncharted territory in many ways, but Fannie Mae sent out an update in a letter back on April 8th saying that, yeah, the government said this, but we still have to follow the Fair Credit Reporting Act, which means if you're not making your payment, we got to report it. And it's so new that we haven't seen a lot of credit reports yet, but I have one. I got a screen snip up where the borrower went in forbearance and they showed him as 30 days late. And it also says here in forbearance in really big letters. And that's a scary thing because we don't know yet, because we haven't gotten directives from Fannie Mae or Freddie Mac or FHA on how that's going to be treated. But based on my 23 years of experience, I suspect that's going to be treated a lot like a short sale or a loan modification. If you have forbearance, you may not be eligible to get financing of any type for a couple years. Could be 2 years, 3 years, 4 years. We don't know because this is all so very new. But forbearance is kind of a scary thing. And I have what I believe is a better solution. Right now, rates are fantastic. Let me show you what's going on with the mortgage market. Mortgage rates are dependent largely on what mortgage-backed securities sell for. Right now, we are up 25 basis points on the day. And this chart shows what mortgage-backed securities have been valued at over the last 5-year period. And you can see right here is where we are. And we are very near, just off the all-time high. The higher mortgage-backed securities are valued, the lower rates are. We're seeing 30-year fixed down around 3.125, 15-year fixed down around 2.25 for owner-occupied properties. Investors are going to have to pay a bit of a premium for that. It's the way Fannie Mae and Freddie Mac roll. But if you started the loan process now on one of your investment properties, we'd probably be closing right there around the first week of June. You would have no payment in June because we're going to close then. No payment in July. Your first payment would be in August. So refinancing wouldn't damage your credit. Chances are you could reduce your mortgage rate, save money each month, and avoid a couple months payment, and you wouldn't have to pay it all back in one fell swoop, as is the case apparently with forbearances. Now you really want to, if you're looking into forbearance, get as much information as possible and read that thing carefully. Do you have to pay it all back at once? And there's been this myth that, oh, they'll just tack it on to the back of the loan. And often it can't work like that. And here's why. Usually the person, entity A, let's call it Cenlar or Mr. Cooper or Aquin or one of the other loan servicers, they service it, they collect your payment, and they get paid some money for doing that. But somebody else over here owns it. It's usually sold in a mortgage-backed security, millions of dollars of loans bought together, sold on Wall Street to pension funds or other investment vehicles. And if you don't make your payment to Mr. Cooper or Cenlar or Aquin, they still have to make a payment on your behalf to the UAW or to Fannie Mae or to the teacher's pension fund. And that's part of the reason they can't just add it to the back of your loan, because you got two different entities involved. It would take a loan modification, and many people tried to get those during the credit crisis, and they were painful and took a long time to accomplish, and very damaging to people's credit. So be real careful if you're looking at forbearance, is my advice. Rates are good. Refinance instead of forbear if you can. Any questions? Oh, I wanted to add, I think highly of Derek Green, who I've worked with in the past, I've known many years, and I've also worked with Ben Ellis. He's one of the sharpest realtors I know in the business, and I know a bunch.
Thanks, Brent. You're making me blush.
Oh.
Well, let's open it up to questions. I mean, there's a lot going on. As we've all said, we're in uncharted territories for everyone. No matter what side of this industry you're looking at, we're all trying to figure out, when is this going to go away? When are things going to go back to normal or a new normal? But what we want to do today is bring you guys together to see, to let you know what we're seeing right now, and then help you make decisions as you need to for your properties. So what questions would you have? It looks like we'll actually start with one up here that Mark texted in about what do you do with the furniture? Sorry, that was that one. So we've got the Get Your Move On link is in here. It doesn't show as a link. Sorry, I'm new to Zoom, but it's in here. GetYourMoveOnLLC.com. And it looks like Tweeners, is that, yeah, Tweener Home maybe an option two, if they're, and I'm not sure exactly how they work, but you may be able to list on there. Or Michelle, would you want to talk about what Tweener does real quick? Give a quick little plug if your audio is working better.
Can you guys hear me?
Yeah, that's better.
Yes. So Tweener Homes is it's just another platform for rental properties. It's not like Airbnb. We do execute over 30-day leases. We are a licensed brokerage, so we do take care of the legality. We have Patrick McQueen is our lawyer, and so we have everything for eviction policies, anything that can happen or would happen if you have, sorry if you hear my kids in the background, if you have any concerns about that. But all for furnished. We don't move anything out. We have a Tweener certification you have to pass. We do have professional photos that need to be uploaded on our website. And if you go onto our current website, you'll see it's kind of uploading your home just as you were for the platform of Airbnb. So you would block out the times that are very lucrative for you. So we really reach out to like either the snowbirds or the summer months that people are looking for in between homes while they sell and buy homes. But we are completely furnished. We will not take a home that's not furnished.
Awesome. Very cool. Thank you for that. So let's open it up to questions. Yeah,
Yeah.
Herb, what you
Hey,
got?
Amanda, this is Herb. Just a quick question on the baseball thing. I've been reading about that. Our place is walking distance to the stadium down here, and it's 4-bedroom. And I'm debating on, you know, do we lower the prices for a month until I don't want to lower the fall prices, you know, to $90 a night kind of thing. But what's your flavor on, do we wait to see what happens with baseball before we dump the price, or is it a good time to dump it for a month or two and then just keep the other ones back at market level going into the fall?
So what we do with our pricing, we actually started a few months ago using Beyond Pricing. It's a pricing software. And so they scrape all of the information from all the listings around there. And even their calls, they're like, hey guys, this is a crapshoot. Nobody knows what's going on. Just get your place booked. We're going to lower the price to get your place booked. So what we've always done and what they do in their pricing is if you have last minute openings, that's where the price drops. Things that are further out have always stayed up. So like right now, I don't think there's any reason that March shouldn't be how March normally is. It should still be our peak season unless we get this huge wave of this again and things get shut down again. We should still have a peak March and be able to get our great rates in that month. So I don't think discounting anything there. Fall, if this has gone away, they're still gonna be traveling. And I highly suspect that as soon as travel, like I know we don't have any travel bans, but travel cautions are lifted. I know my husband and I are like, what's the first thing we're going to do? And we're going to get on an airplane and go somewhere, anywhere, like hopefully without our child, because we just need to get away. So I don't think that changing your price too far out, I mean, that's not what we're doing. Yeah. We're doing more of the, like, because there are so many last minute bookings that are coming in right now.
And what about the summer months of, you know, July, August, you know, May, June, July, August down in Scottsdale? It's a low season. So those should probably be your lowest prices of the year, technically, right?
Yeah, and actually what we're seeing right now is July rates are always the lowest, July and August. Like it's, nobody really, I mean, people do come here. A lot of people actually do because they're still on vacation and you have people moving, but nobody wants to pay outrageous rates here. Homes that are booking right now are booking at July rates. So that's just something to keep in mind. But yeah, July will always be low. I hope it doesn't have to go like sub-July rates to book July. But one of the things we do with our properties is if you've got somebody who's staying for a month in July especially, we have utility caps for them. So we have a 4-bedroom house in the South Mountain area and we put a $250 utility cap on it. If they want to run the AC at 69 degrees, they are welcome to, but they have to pay the additional $400 for that AC bill. So there's some things that you can do with that that can help.
Man, can I add in on that a little bit too?
Yeah.
So we've noticed that the link, so people are booking closer to their booking times versus booking it out further out. And so, you know, things like 1 month or 2 month rentals are starting to be a little bit more of a thing. So that kind of helps you float through the summer months, but changing your prices 6 months out might affect the travel plans of what happens when these cautions are lifted. So people are booking closer to the time that they need to be going there versus booking it out further out.
Yeah. What other
Yeah, I
questions?
mean, I can just give a kind of an experience here on the long-term side, and it can kind of apply if you decide to keep the property as a short-term. What we're doing is, again, just reducing until we find the market. So it seems like the pricing tool that you're using, Amanda, totally makes sense. But it's really about making sure that, yeah, you're just making those adjustments until you're starting to get that volume you're typically used to seeing. And every day your property is sitting vacant, you're losing money. So the more you can get it occupied, you know, the better off that you are. And so I think as it relates to long-term, a good portion of our properties are student rentals around Tempe. And so what we're doing for kind of that set of properties is we're reducing the prices now to lock in tenants for next school year, because there's a fear that next school year won't start in class and it would potentially start, you know, online. If that's the case, you know, all bets are off for our student rentals that we manage. And so what we're doing is we're giving rates that we haven't seen in 2-3 years to secure tenants for sure, right? Just to make sure that the property is going to be occupied. But as soon as the announcement comes out, yep, we're good for fall semester, our rates are going to go right back up to where they were. There's going to be a huge influx of people that come. So it's really just that short-term period that you just kind of need to weather that storm. And then, you know, the market will start to normalize. Won't be normal, it'll start to normalize.
Yeah, something to consider we've talked with people who are leery about dropping their prices. I'd caution letting your ego get in the way if you are somebody who's not wanting to lower your prices. Lower prices during the summer doesn't necessarily mean worse guests. In fact, we see a lot of really good guests in the summer because they're moving here or they're still on vacation. But if you, oh gosh, I just lost my train of thought. I've had too many Zoom calls today. But the algorithms for the sites. So say you don't want to drop your price and you're like, you know what? My 4-bedroom home is not worth less than $300 a month. If people look at your listing and they click on it and they click off, it's very similar to SEO on Google. If they click off, Airbnb goes, ooh, people don't like that property. You move down in searches. So if people click on you and then they like what they see and they book, then you move up in searches. So likewise, if people aren't even clicking on you because your price is too high and everybody else is priced lower, they move you down. And that may not seem like a big deal right now, but when people start booking again for the spring, you're going to show up on page 3, 4, 5 instead of page 1, 2, 1 or 2 in their searches. So the actions that you're doing right now are still helping to build momentum for your March bookings. I always think in terms of March. How do we position ourselves best for March? So.
Hi, Amanda. Question on that. I don't know if you can hear me, but okay. So I've heard also that people have said advised for SEO to not block off dates. So let's say I have a off platform 1 month or 2 month booking, and previously people were saying don't block off those dates. Just jack up the prices so that you still show up in searches. And I assume the logic there was to encourage people to continue to click on, because I think just the click-through was one of the metrics that people had assumed was beneficial to SEO. But it sounds like you're saying, yeah, if they click, but your place is really not available, they don't book, that's going to harm you. Do you know where the balance would fall?
So from our understanding, and I'm sure they're changing their algorithms all the time, but from our understanding, especially ones like Airbnb, they look at it, if you've blocked it off, that means you're living in the house or somebody else is living in the house. And so from our understanding, they don't penalize you for that in your search as much as if people bounce off of your page. So if they go in and they bounce off, that's worse than not being available.
Okay.
Because they would assume that your place isn't available. It's hard to penalize you if you're renting it out.
Okay. Yeah. And I just threw this into the chat too, but I don't know if you've encountered anyone that has actually booked like the traveling nurse kind of demographic.
Personally, and anybody else speak up to this. What we have seen challenging with traveling nurses, it might be different right now. They usually have a limited stipend. So they're usually looking for like a 1 or 2 bedroom unit because they have like $1,500 to work with usually. And so the larger homes usually don't fit what they need. And the other thing that they always need is a washer and dryer in the unit. So that's always a challenge because a lot of the like Scottsdale ones, they have a laundry room. They need to be able to walk in, strip off their clothes and throw it in a washer and dryer immediately. But does anybody else have any experience or things that they've seen recently or in the past with traveling nurses?
Yeah, we've had a few different traveling nurses stay at our homes, but actually my most recent one was a 4-month stay, and he had a contract with Banner, but Banner just cut his contract to I think 2.5 months because they're overbooked. So they have too many nurses now. So that's kind of like we're kind of in that middle ground as well. But generally, traveling nurses are on 3-month contracts, and that's been the most beneficial for us as far as wading through the water in the summer. But they do have a limited stipend for what they can book for. And the smaller properties do work better for them.
So
Yeah,
no. Oh, sorry.
As well. Oops, sorry.
Oh, go ahead, Julie. Michelle?
Yeah, we get reach out with a lot of traveling nurses as well. Budgets we've seen from $900 to $1,800 at most. 3 months, typically 3-month stay. And then like what Amanda said, they would need a washer dryer in the unit. Typically they do like full out apartments and condos are typically like what fits in their area. But right now in a lot of the Facebook traveling nurses pages, they're really looking for those accommodations because a lot of them are coming in. So if any of you are in those pages or not in those pages, I would suggest joining them because if your pricing will fit them monthly, you would be a good fit. Another trend I wanted to bring up was someone asked. So since a lot of people have been coming towards us for longer stays, we're still booking out July and August, no lower than $2,500 for our units. That is with utilities either having a cap or utilities not being included at all. So I just rented out one in Peoria, $23.30, and we're thankful because they allow dogs. That's a lot of another long-term trend that we're seeing is that these people that are either in between homes or looking for homes have pets. So I have a couple clients right now that I reach out to if they want to do monthly lease, but unfortunately they didn't even want to join that ball game of the potential of a pet destroying anything in their home. So keep out lookout for that as well. And that if they don't allow pets, we just say, hey, go to the next property. So
Those
are a couple of things that I wanted to let you owners know. Long-term rental, if you're thinking about that switch.
Yeah, your audio got a little funky there at the end, but yeah, I think everybody probably heard most of that point that July and August are still booking out at pretty good rates, but people are looking for places with pets quite a bit too. So.
Yeah, there are two things that long-term rentals tenants look for: upgraded kitchen and pet friendly. Those are the top 2 things that long-term tenants look for.
Anybody else have any questions or things that they would like to discuss as a group?
Just one, Airbnb versus HomeAway. which one do you find? I've used both, but it's always hard to get the pricing matched on both if you're not using, I guess, like a beyond pricing package.
Personally, I don't think your pricing needs to match. Sometimes they'll book it at a higher price on a different site.
Yeah.
Yeah.
Which one do you feel that works best in Scottsdale, Old Town Scottsdale?
It depends on the time of year and the month and the. We list on every site we possibly can.
Yeah.
And so even, I know there were some questions about booking.com on the Facebook group. Booking.com has its ups and downs, but they charge a ridiculous commission. So you've got to have your prices way higher there, but people still book on there. As long as they don't do a chargeback, then yeah, then you're cool. But
I wanted to add that what I'm seeing when some people extend, they're like, can you give me a deal if we extend for another couple weeks? And what my friends have been doing, like, all right, if you pay me directly, so that way they're not sharing the fees to the online sites.
yeah, yep, that's always a possibility too.
Brent, I got a question for you. Have you seen anything different with Airbnbs or short-term rentals in the mortgage side of things as far as getting lending or anything specific for short-term rentals in that right?
There has been some contraction in loan programs and increasing credit standards. They're nowhere near where they went in the aftermath of the credit crisis, but some players have pulled completely out of jumbo. Like Wells Fargo is not doing the jumbo at all. Chase has raised their credit scores. You have to have a 700 to be able to get a loan from Chase right now. Now we have platforms where we can still make FHA loans for people who have as low as a 580. We still have jumbo programs, but you're gonna have to put down 20%. It's gonna be tougher if you want to pull cash out of a jumbo. But we also had a lot of alternative programs that were great for VRB owners because they went off cash flow. They weren't normal W-2 or tax return type income, and those have kind of been put on the shelf for a while. I expect them to fully come back in a couple months, but right now fear is high, and those anxieties have cinched up the programs a little bit.
Yeah, I've seen a couple lenders try to work through cash flow, but I know that the numbers have really adjusted now, especially in this climate. So I figured some of those are pretty much on the shelf at this point.
Yes.
Hey, one other question, maybe Amanda. I saw some regulations, government regulations coming up for Scottsdale where they don't want more than 6 people at a rental. So they're trying to discourage large party houses. Has that affected any of your rentals? Are you hearing much of that? So you're on mute. You're on mute, Amanda.
There we go. I am actually really interested to see where the legislation and the city councils go right now, because they were full bore into figuring out a solution for the problems that we've been having. And I think some of the problems are going to solve themselves, to be honest. They were looking at a lot of clustering issues, occupancy issues. I mean, even right now, technically homes are only supposed to house 2 people per bedroom, a maximum of that. We got contacted by a property manager that we asked what they specialize in, or what's their typical property, and they said they mostly have 3-bedroom homes in Old Town that sleep 20. And I said, I'm sorry, we are not working with you, because that's not good for anybody. So those are the types of homes that hopefully will go away during all of this. And if the market contracts a little bit in short-term rentals, hopefully those are the first ones to drop off, because then it can be beneficial for the rest of us. So.
Okay, that's kind of what I was hoping.
If I may add, that problem or the angst that some people are feeling. We're seeing this a lot in Sedona, where there's a lot of anger because there's a shortage of homes, and they want to blame the VRBO or the landlords for gobbling up those properties and making them into rentals. And I think the supply and demand is going to get alleviated because demand's falling and supply is increasing a little bit. Supply is still very, very low, but it's getting better. And so hopefully this ordeal will turn people's attention away from such hostile actions.
Yeah. Cool. Any other questions?
I'd like to hear Ben tell us a little bit about what he's seeing with prices and values in various segments of the market, and I'd love some of his expertise. Can you share a little bit on that, Benjamin?
Yeah, not a problem. So really, I think on the sales side, we haven't seen too much of an adjustment. I think what we're starting to see some cracks, and it really starts with transaction volume. And so one of my friends works over at Chicago Title, and he said that new escrows are down about 30%. And this was as of about a week ago. In addition to that, we're seeing a 50% increase in the amount of available inventory. So it went from 12,000 homes that were under contract or active to 18,000 homes under contract or active. Now, keep in mind, the amount of a stabilized market is about 1% of available homes to the population. So if the population is, call it 4 million, 40,000 homes would be a stable market. So we're still well below where a balanced market would be. So it's still a seller's market. So I think that's why we're seeing that the trends are still, values are going to remain pretty strong. What we're seeing is that iBuyers have retreated from the market, so they're not buying anymore. They're liquidating their assets. There are some other entry-level buyers that aren't able to purchase because they've lost their jobs. And I think that that falls kind of through every class as well. And then historically, what we see in kind of the luxury space, luxury condos certainly take the biggest hit, but luxury homes as well, kind of in that $800,000 plus range, is that when the stock market retreats, then typically people with more means retreat as well and have a bigger hit in terms of values in Arizona. But those properties that are still, in that $250,000 to $400,000 range are still moving pretty darn quickly and still kind of at stable rates. So we haven't necessarily experienced that big drop yet. But what I can tell you is that iBuyers that have properties on the market are taking lower prices. Wholesalers that we work with are offering less for properties to flip. So the market is starting to change as it relates to that. So I think that's where a lot of the clients that are considering, do I sell now and take some chips off the table? Yeah, I mean, it makes sense because you're able to realize the equity, in the appreciation run we've had over the last couple of years, and then kind of, re-enter the market, and without having to ride kind of the tumultuous time. But if you've dialed in your asset, you're a long-term holder, which is where the majority of our clients fit, then you ride it out and you'll be okay long-term.
Yeah, just kind of anecdotally, I've been working with a few buyers the last couple months that have been looking at homes between 325 and 375. 2 months ago, I would go in on the day it was listed, and the day it was listed, there would be at least 12 offers on these homes, and that's what we were competing against. I went last week to see homes. There are 2 to 3 offers going into that same price level right now. So again, it's still multiple offers, but you're going from 12 offers your first day being listed to 2 offers on your first day.
We see a number of clients who bid on houses were beat out by other people in multiple offer situations. And because of fear around this, the other buyer canceled and our client got the house and actually was able to get some seller concessions to pay closing costs. So it's actually a great time. It's going to be a better time to buy than we've had a very long time for young people or people who need to buy in those lower price ranges. And interestingly, we still have down payment assistance programs where you can receive 2 to 5% in grant money to help cover your closing costs and down payment. And I'm also excellent at helping remove some boo-boos from credit. So if you have friends or family members who could use that service in helping them get ready to own a home, I'm happy to do that.
Just throw a plug, the Tempe condo that Moxie's been managing, we got it listed under 350, 3-bedroom, 2-bath, walking distance to Mill Avenue. So you'll see that soon. Regatta Point.
Good little location. Cool. Well, we are right at 4 o'clock. Are there any last thoughts or questions? I'm going to put my email as well as Ben and Brent's in the chat here for everyone.
Please hold while I try to connect you.
Oh, mute that. If anybody, while I'm doing that, if anybody else has any other questions, I do not know how to make a link on here. So just please excuse that that's not a link that's coming through the chat. but at least you can copy and paste from it, hopefully. So we've got Brent's. Any other questions or last thoughts?
Thanks for putting this together, Amanda. I appreciate you.
Yeah, thank you.
Yeah, you're welcome.
Thanks, Amanda.
Yeah, thank you. Thank you.
Yeah, absolutely. We
Nice
will
to meet
likely do it
everybody.
again. Yes. Thank you, guys. We'll talk to you soon. Good luck.